140 characters away from what? Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of February 20th, 2017. I say 140 characters away from what? Because, of course, I'm talking about the president's Twitter feed and just wondering what comments might come out and how the market might react. It's pretty obvious that the market is responding right now in the short term to emotion and to the information coming out of the White House. I say it's obvious because nothing's been enacted, no legislation is passed, no tax code has been rewritten, no trade treaties have been negotiated. So none of that has happened. There's speculation that it will, and of course, diverging opinions about whether those things are good, whether they're bad. But so far, based on the information coming out about what the administration wants to happen, the market's going up. That's a reality that's undeniable. You can look at the chart in front of us and go, the market's going up. Could information come out that would make the market go down? Well, absolutely. Absolutely. Or more information could come out that could make it go up even more. I call my newsletter Beyond the Noise because that's what I try and do is look beyond whether it's Donald Trump's Twitter feed or financial headlines or any other source of information. I try to look at what's the reality, what is really going on in the market, and to trade accordingly. Let's look at a couple articles here that I think are a good example of the noise that we need to look beyond. So here's a great headline on Seeking Alpha from this source, Fig Ideas, whoever that is. But the headline says, the market is being rational, meaning it's going up for some good reasons. And you can find lots of articles like that that talk about the market's going up and it should be going up and it's going to go up some more. Google it, you can find all kinds of articles. But you can also find pretty much an equal number of articles taking a different position. Here's Goldman Sachs article published on Yahoo Finance saying, Goldman Sachs says there's cognitive dissonance existing in the U.S. stock market, meaning it's going up for the wrong reasons and it shouldn't be. Here's an awesome picture of a dude all wired up here, kind of scary looking. But Goldman Sachs analysts believe investors and traders in the stock market are acting irrationally. So we've got an equal number of articles saying the market is irrational right now and some saying it's very rational. Which is it? I don't know. Here's what I do know. The market's going up, right? And we can see that reality on the chart in front of us and we can trade according to that reality. And that's what we're doing here at Follow Me Trades. Now, just because the reality is that the market's going up, and it's been going up for this year. In fact, let's take a quick look at what the major indexes have done this year. So here's the Dow Jones Industrial Average, up 4.36% year to date. S&P 500 up 5.02% year to date. And the Nasdaq up, 8.46% year to date. So the market's going up absolutely is a reality. Dow blew through 20,000, historic emotional level, sitting up here at 20,624. So we're trading that, but I'm not going all in. I'm not betting the farm on it continuing to go up. What I'm doing is finding individual trades that have great technical setups, the exact setups I'm looking for, and then I'm using risk control very, very carefully. Risk control means that we control, if a trade goes against us, if it's a loser, we control how much we're going to lose on that trade. And we only take trades that have the potential to lose less than they would make if they're winners. We want big winners, small losers. And if we maintain that discipline of only taking the best trades and controlling the losers to be small and letting the winners be big, we only have to be right 50% of the time. If we're right half the time on half the trades and the winners are bigger than the losers, we are profitable. And if we can push that percent up above 50%, we're going to be even more profitable. So that's the goal, is to use risk control, to pick only the best trades, and to trade the reality of the market. And we're trading both sides. We're long on some stocks that are riding up with the market, and we're also short some that are going down against the market. And we're primarily focused on trades that really aren't participating in lockstep with the major indexes, but have their own sector trend and performance, and we're trying to catch things early, right? The indexes have been in a long bull run, and it's a little late to try and tap into that, even if it's going to go up. But we have other sectors and individual stocks that have their own trends going up for their own reasons, their own realities, and we're trading those with some good success. We're already in really, really nice profit year to date, just under 2 months into the year. If you're interested in finding out more about that and participating in trades like that, there's a link you can click and sign up, $39 for a 30-day trial to jump into the stock pick service, see what it's about. We've got a handful of trades that still have great entries, so you could sign up today and be taking those trades Tuesday morning, tomorrow, the 21st of February, when the market opens. So if you're interested, check out that link. So to conclude, the major indexes, if they continue going up, we're going to be trading that. We're going to continue to be profitable. We won't win every trade, but the average will be that we're making money. And if the market drops very suddenly, if a 140 character message comes out that alarms people and the market drops, we're going to profit from that as well. So we're taking the best trades, long and short, using risk control, keeping our winners big and our losers small. That served us very well for several years, and it's serving us very well right now. Let's take a look at gold and oil this week, as we always do, and see what's going on there. So here's the gold futures contract on a daily chart, and we've been talking about this for a few months now, that we thought gold put in a bottom, had a nice rally, a nice correction, and now it looks like it's up on the next leg up. It's up above the cloud now, the Ichimoku cloud. We think it's got more room to run. Interesting that gold is rising, that there's a bit of movement of money into safety, into quality, as it's called, even as the indexes are heading up, and it appears that some people are just hedging a little bit against the eventual correction in the indexes. So we're still bullish on gold. We're still long a handful of gold trades and still like it a lot. Think it's got some more room to go up. Here's the oil futures contract on a daily chart, and oil continues to run sideways in a pretty narrow channel. We're still looking. We would like to see oil break up above 56.27. If it does that, we think there's a pretty good rally coming. It has not proven that yet, so we just have to wait and watch on oil at this time. It's in this channel. It won't stay in it. It'll break out to the upside or to the downside, one direction. Markets don't stay in these channels forever. So we'll see. If it breaks up, we think there's going to be some good trades there. If it goes down, breaks down through this cloud, that'll be a little hard to determine what to do. So we're rooting for it to go up, but we'll have to wait and see. And if it does, there's going to be some great trades, and we'll be taking them. Well, that's it for this week. Who knows what the market's going to do? There seem to be very strong opinions on both sides that it's going to continue up, and there's good reasons for it. There's strong opinions that it shouldn't even be where it is today, and it's going to drop. The reality is it's going up, and the reality is also that someday it will correct. Don't know when, but it will. High probability. Bull markets historically have always corrected. It's a normal, healthy part of an ongoing cycle. And we'll be there. When it does eventually, there'll be early warning. We'll see the signs, and we'll trade according to that reality when it's in front of us. But right now, we're trading this reality, and we're doing pretty well with it. So take care. Trade safe. Use risk control. Keep your winners big, your losers small, and tune in next week, and we'll be providing the update then. Thanks.